The European Central Bank, quite simply, the central bank for countries in the Eurozone. Its governing council is responsible for controlling inflation, with a target of just below 2%. But how does it do that? By setting three key interest rates: the minimum bid rate, marginal lending rate, and deposit rate. National central banks in the Eurosystem apply these rates to transactions with commercial banks. So let's take a look at them in turn. The minimum bid rate is the rate of interest set by the ECB for 1-week loans. When the rate is lowered, it encourages commercial banks to borrow more money and lower their own interest rates. This reduces the cost of borrowing for businesses and consumers who respond by borrowing and spending more. The result can be increased spending, economic growth, and ultimately a rise in inflation. If the ECB needs to reduce inflation, it may put the minimum bid rate up. This increases the cost of capital for banks, businesses and consumers, which typically reduces the amount of borrowing and spending in the economy. The ECB's second rate is its marginal lending rate, or the rate of interest set for overnight loans. They're used by banks to meet their reserve requirements for the day, ensuring they have enough cash to meet their clients' needs. The ECB typically sets the marginal lending rate just above the minimum bid rate, so banks can make a profit by lending any spare cash on the interbank market. This encourages banks to lend to each other, making it easier for all the banks in the system to meet their reserve requirements. Commercial banks respond by making investments and giving more loans to businesses and consumers, which boosts spending across the economy. Again, the result can be economic growth and an increase in inflation. The final rate, the deposit rate, is the rate of interest paid on deposits made with Eurosystem banks. If this rate is high, depositing money is more attractive for commercial banks than providing loans to businesses and consumers. If this rate is low, providing loans is more attractive than depositing money. Traders pay close attention to changes in the ECB's policies, as they're likely to affect the price of some foreign exchange pairs, commodities, bonds and stocks. To learn more about trading, join IG Academy. To start trading, open an account.